IPO stocks are so hard to invest in. They can go up and down huge from their IPO listing price. And we have seen so many of them already come onto the market, like Airbnb and DoorDash, over the past few months in 2021. Well, I'm here to show you guys three IPO stocks, ones that have come onto the market within the past month or two. These companies, believe it or not, are growing their revenues by about 100%. That's right, they're doubling their business year after year. So you don't want to miss this video, guys. Make sure to subscribe and stay tuned for the rest of this video. The first stock to watch here is going to be dLocal, all right? Ticker symbol DLO. This is a Uruguayan company, payment software, right? They provide the ability for a lot of merchants to use their software platform to enable their websites to take payment orders from people from all over the world, right? Internationally. Not every, global company out there takes orders from, Brazil or some country in Africa or Asia. And a lot of different consumers in those countries have like very fragmented payment options. You could go to some country and they would have 20 or 30 different options. So it is not very friendly to, a company like Amazon or, just some, clothing retailers, other companies like that, to really go out of their way to accept 30 different things when they can probably pay a company like dLocal to use their platform.
dLocal enables global merchants to connect with billions of consumers in emerging markets with one API, one platform, one contract. Enterprise global merchants have access to over 600 payment methods in 29 countries in emerging markets. We offer both pay-in and pay-out services to our customers to enable them to accept online payments and pay their suppliers and vendors in local currencies.
So when we look at some of these numbers here, 330 merchants, again, Amazon is one of them. They actually did a deal recently with Amazon for the Brazil marketplace to open it up for global sellers, right? To sell into Brazil. 2 billion users across the various platforms, 29 countries, 600 local payment methods, $104 million in revenue in 2020. All right, keep that in mind. 129% revenue growth over the past year. In just the first quarter in 2021, they did over $40 million in revenue. So obviously things are still growing. I expect them to at least do 200 million this year. So that'll be another double up in revenue. And this could keep going on and on and on because in emerging markets, e-commerce is growing like crazy and people are getting more and more money and more access to global products. Right? And in turn, merchants are getting more access to those global customers. And again, right? Billions of customers at stake here. As far as the valuation goes, you look at this company here today, it's trading at about $39.41 here as of this screenshot. It's gone up since its IPO. It started off around $31, I believe. And you can see the market cap here is $11 billion. So this is a very sizable company. Now, taking into account probably this year, they'll do about $200 million in revenue. They have a little bit of net income here as well, which I like. It actually, I should say not very little. It's actually a very, I like it. Actually, I should say not very little. It's actually a very large portion of its revenue. $16.9 million in net income. The revenue was $40 million. So they have some very, very strong net profit margins here. This is a company that is making a lot of dough, right? It is pretty highly valued at this point in time, though. If you look at the PE ratio and the price to sales ratio, actually when it comes to price to sales, it is trading about 50 times this year's sales. So it's not exactly a cheap company, I would say, but the more it gets to scale, we're talking about a couple of years down the road, it could be at $1 billion in revenue and it could be making $400 million on the bottom line. And it's only going to get more and more profitable. The second IPO stock to watch here is going to be GLBE, Global E Stock. All right, this is a company that IPO'd, I believe, back in April, actually. So there is a bit more history with this one. This is a company that is actually very similar to stock number one to watch here because this is also a company that offers a payments software solution for global merchants. Once again, very similar thing. I'm not going to go over it all, but the same deal with currency issues and payments acceptance with those companies, also fraud detection. The difference here with GLBE versus dLocal is that GLBE also, on top of the payments processing, they also have a shipping solution. So if you go out to, I don't know, Antarctica, right? And I order something from Amazon or some other merchant, they actually have partnership now with Shopify. So any of those, thousands and thousands of Shopify websites out there offer this solution. And I have no idea if I'm that merchant, how the hell is shipped to Antarctica or shipped to some, remote village in South America or something like that, right? So what GLBE does is that it gets rid of the headache for those merchants. It's one thing to, just pick one shipping company like DHL or UPS, and then it gets sent into that country, but you need to figure out the best low-cost solution to get it actually to that consumer, like the last mile delivery, right? It is about a $54 stock here today as of this recording. It has over 150 million in revenue over the past year. It's actually larger in scale than dLocal, but it is less profitable. It's actually not profitable yet, but is expected to be within the next 6 to 12 months. So I think that this is, again, another stock to watch here. It's actually doubled since its IPO price. So maybe not necessarily the best price to buy in right now. It trades at a pretty high sales multiple, similar to dLocal. But when it comes to fintech, once you get to a good scale here and then you start boosting that profitability, then I think the valuation becomes a lot more attractive and it makes a lot more sense in the long run. We are going to get into the last stock here, but before we do so, I would appreciate if you guys gave this video a big like and let me know in the comments down below if you are enjoying this type of video going over new IPOs. It's always interesting to me to learn more about new companies. But the third stock we're talking about here is going to be BZ stock, all right? We're talking about business here because Kanjun Company is a Chinese company that is in the staffing and hiring business, the job search type of business here, all right? So this is an area that obviously as the economy opens up and also as we get into a more digital society, especially in China, because a lot of areas there, especially very rural, suburban type of places, they are really getting more and more advanced, and those people need to be connected to ways to get more jobs, especially as those environments become more urban, and big companies increasingly move their focus towards those rural areas. You ask Alibaba, you ask PDD, JD, a lot of those big e-commerce companies, they're trying to tap into those areas right now, and they're going to need to hire more people. Now, funny enough, I recently created a Moomoo trading account. Again, link in the description down below if you want to get free stocks. And you can actually subscribe to a lot of these Chinese IPO stocks. I think they must have the hook up there because it is like a Chinese app. But you could have subscribed to this company at around $20 per share and actually traded up to $40 after it opened up. And here today it is about $36. It's pulling it back a bit, but I think that this is one that's not going to be a pump and dump. It is very much, in my opinion, a very legit company. You look at this, about a $10 billion market cap here, and it has, once again, 100% revenue growth over the past year, and consistently over the past several years, it has done so. And in the past quarter alone, it's actually up around 150 or 170% revenue growth. So I really, really like this one for the long term potentially. I like to think of this as the Chinese version of LinkedIn.com, right? Essentially, I feel like it's a very similar business model. You have the enterprise users, which are the actual bosses from companies, whether they're big companies, medium-sized or small companies that are looking for employees. And on the employee side, you're someone that wants a job, whether it's a college student. They say they have a lot of blue-collar workers here, even gold-collar, which they basically say kind of rich, white collar people, people that have nice office jobs. I think they said over $250,000 salary from their previous job. And I'm sure like LinkedIn, they probably have a premium version where they charge fees for matching you with employers. They charge you for boosting your name up to the top of a list of searches if the bosses are searching for employees. things like that, advanced searching. When you look at some further details here, you will see that in the first quarter of 2021, they had 25 million average monthly active users, which is incredible. And over the past year, that has increased 72%. It ranks number 1 in the online recruitment space in China. And lastly, when we look at the Chinese online recruitment market size, you will see that this is a industry that's expected to grow from 55 billion RMB to over 223 billion RMB. So that is an average growth of over 30% year after year after year. However, guys, I do want to point out that this company still has a very big net loss, actually 941 million RMB, so about 150 million US dollars. I will say that you don't want to invest in too many companies that have super high growth, like 100% growth, but they're also losing a lot of money. You don't want to have too many of those in your portfolio. But anyway, guys, those are your 3 IPO stocks to watch here in June 2021. Once again, it is DLO stock, D local, GLBE Global E, and you have BZ Kanjun Limited. All right, you have pretty good, interesting stocks here. They're all growing their revenue super fast, super high growth stocks, 100% plus revenue growth. Let me know in the comments if you are jumping into any of these. And until next time, my friends, stay well and invest responsibly.